Welcome. We're
Good
going to get started here
evening.
in just a
Happy
minute.
Thursday.
Tonight, we've got myself, the amazing Langston Ellington, the am- heavenly Angel Perry, the awesome Grace Okorie-Eric, and the amazing Cecelia Marlow.
All right, so welcome everyone to our Achieve Your Goals for Home Ownership. And thank you, Langston, for that awesome introduction. All right, so I just want to know, kind of start thinking about what do you think you need to do to achieve your goal of home ownership? You know, for you, it may be different than someone else. So it's always good when we set a goal to start thinking about what we need to do as an individual to help us get there. All right. So what we'll cover today is we'll talk about goals, priorities, and strategies with helping us reach our goal. And then we'll talk about fears versus facts about buying a home, why you should buy now, the realities of our market, and we will go through the 6 simple steps to home ownership. All right, so goals of becoming a home owner. Priorities and strategies. All right, so priorities are those things that you need to do that will help you achieve that goal of buying your first home, your second home, your vacation home, whatever it is. But your strategies are how do you accomplish your priorities? So priorities, it could be save for a down payment. To accomplish that, it may be pick up a side hustle. It may be review your current budget and see, you know, where you can kind of cut down on some things. It may be do a no spend challenge. So it just all kind of depends on you and what you can accomplish. What me and Langston do during our buyer consultations is we go over with you, what are your goals? What is your goal for your purchasing a home, your timeline? And then we also talk to you about your priorities and your strategies so we can help you accomplish that goal. So Langston, do you have anything you want to add talking about priorities and strategies?
So your priorities they'll come down to a number of different topics and subjects as far as how you spend and what you're looking to accomplish. And the strategies really come down to how you plan on getting to priorities. It's a larger goal funnel, essentially.
All right. Thank you, Langston. All right, so we have our fear versus facts. So we got our fears versus facts poll about buying a home. So what I'm going to do, I'm going to launch this poll and we'll go through whether you think these statements are fear versus facts. So launching now. And Langston, we forgot our Jeopardy music.
Do, 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 do,
All right. Still waiting to get everyone in. All right, give it a little more time. And that was a lot of statements.
A lot of questions.
Next time we'll make it shorter.
No, I would have done Jeopardy longer had I realized it was 10 questions.
Yes. All right. Okay. So, all right. So, statement 1. I can't afford to buy a home right now. So that is, we got 100% correct on that is a fear. All right. Until you do the math, you really don't know what you can and can't afford to do. Okay. All right. And then Langston, you want to take statement 2?
I should wait until the market get better. There's never, realistically, there's this thing called refinancing. So even if the market gets better, the best time to act is now.
Very true. All right. So next one, I don't have the money for a down payment. All right. That is another fear. There are a variety of down payment options available to you. You just need to get working with an agent and a lender so that you can identify what your opportunities are. And so we will talk a little bit more later about down payment assistance programs. All right, Langston, you want to take the next one?
I can't afford to buy my dream home. Really, home buying is looked at as a process by a number of different organizations. Is why you commonly hear the expression a starter home. The reality is everyone has to start somewhere. For a lot of people, the starter home can be their dream home, but for many other people, it's not. But the reality is you still have to start.
That is very true. All right. And the last one, buying a home seems way too complicated. Once again, that's another fear. No one would ever tell you that buying a home is easy. It is not an easy process, but it is definitely a process that is worth it. The opportunity to be able to own your own piece of land and the opportunities that it provides, you're building wealth, you're building a legacy for your kids if you decide to go ahead and leave that to them, or in any way in which they decide to stay in it or rent it out. And there's just so many opportunities, and it's your lifestyle. So you pick like what works best for your lifestyle and you just enhance it. All right.
I'd also add that it's not complicated if you hire the right team. You got the right lawyer, the right financer, the right realtor. It's not, it shouldn't feel complicated, because that's our jobs to make it more easy for you.
Definitely. All right. All right. So why should you buy now? Langston, can you talk to us about like why you think buyers should get in the market and start buying a home now?
So I know we hear the phrase historic lows and everything's historic nowadays. But the reality is interest rates are ridiculously low, and lower than they've been in half a century. And this is the time to get the money while the money's cheap. I know people 30 years ago were paying 5 times the interest. So like there's a possibility that could come back. And I think you'd rather be locked in right now at 4 or lower than trying to keep it down when it's 16 or 15.
Right. I agree. All right. And Cecelia, do you want to go ahead and add on to that? Why should a buyer get in the market and buy now?
I like to bring a little bit of color to why it's important that rates are low, right? So as Langston just said, and I'm going to date myself, when I first got in the business 18 years ago, the average interest rate that my client got was 13%, 13 to 15, right? And so what that meant was that their purchasing power was lower, right? Because the higher your interest rate, the higher your payment. But it also meant that over the length of time that you keep a home, you don't build equity as fast because you're going to pay so much more in interest, right? So if I had a client that was buying a $100,000 home, when we looked at the amortization schedule over a 30-year period, a $100,000 home was really going to cost them $700,000 at that type of interest rate. Right. So when we start looking at, what you can afford, where you want to be and how those things kind of move together, the interest rate is really, really, really important from that perspective. So I just wanted to add that color to that.
All right. Thank you, Cecelia. All right. So realities of our market. So I'm going to speak on Will County and Langston's going to speak on Cook County. So the average home price right now, and this is just the average between a 2-bedroom and a 5-bedroom. So anything in between 3, 4. Okay. The average price is $315,000. Of course, 2 bedrooms are more on the lower end. And of course, those 5 bedrooms are more on the higher end. So it is quite a bit bigger. There is more of a median range of about 285,000. But this is where the average home price is for 2 to 5 bedrooms for Will County. The average days on the market, though, is 49 days. All right. So, I mean, once you identify a property that you want to purchase, you really have to get on it and put your offer in and let that seller know what you want, how much you really truly want to pay. Like, bring your highest and best offer to the table at that time, because you may submit an offer, but another 30, 40, 50 people may have also viewed that home and submit an offer as well. And Langston, you want to talk about Cook County?
So for Cook County, this is actually something to note. In the last 3 months, that number has gone up about $100,000. Everything is moving fast. Everything's moving overpriced or over list price, and the days on market has increased a bit, but not by much. The summation is things are getting more expensive, and there's just not a lot of inventory. So people are paying what they have to pay to win the contract, and what they have to pay to get in the house.
All right. All right. So like I said, we're going to go over 6 easy steps to home ownership. We're going to go through each step and provide a little more detail, and our experts are going to speak and provide you with more information. If you have any questions during this time frame, feel free to enter them into the chat. We will answer questions either throughout or also at the end. We do have a open Q&A session. All right. So, all right. Step 1, hire your agent. Langston, do you want to talk about hiring your agent?
Sure. I'm sorry. So you want to pick the right agent because you need someone that you can talk to, but you also need someone that knows the areas that you would like to search in. And yes, everyone can open the MLS and look up what's in an area, but if they don't know that area and they don't know what you're looking for or what you're interested in having out of a house, they in all likelihood can just show you what they could find. They don't know how to look. They don't have neighborhood connections. You want to find a good realtor that can do that for you, someone that you can connect with, because if you can connect with them, they can anticipate your needs and get you the results that you're looking for.
All right. And Langston, can you tell us about the buyer's representation agreement?
Yeah, so the buyer's representation agreement is a neat tool. It allows us as buyer's agents to set expectations for what you can expect from us. It's a contract that shows you exactly what our duties are, and it's where we spell out how we get paid. Oftentimes, we don't get paid by a buyer at all, but there are situations and events where sometimes the buyer's agent will need to get paid by the buyer. And this is that contract that basically establishes that, so you know what to anticipate, and it's not like a surprise. Oh, you owe me $2,000. Like, no, we're writing this contract so everyone knows what to expect from each other moving forward.
All right. Thank you, Langston. All right. So when is the best time to hire an agent?
Right now.
Yes, it is. Now is the best time to hire an agent. As soon as you decide, you know what, I want to purchase a home. I don't know when, but I want to purchase a home. You need to start talking with the agent. You need to start seeing what your options are, and they will connect you. with, build and help you build your dream team. So step 2, secure pre-approved financing. All right, Cecelia, can you talk to us about getting approved?
Yes, this is the fun part, but this is also the part that everybody gets so nervous about. So, one of the things I love about being a banker is that I get to work with people that, are really looking to figure out where they stand. Okay. Because the reality is, I don't know about you guys, but in my house, when I was growing up, we really didn't talk about credit, and we didn't talk about, buying real estate or paying bills. Like that was just not something that my mom, love her to life, but it wasn't something that we sat around the dinner table and talked about. And so now here we are. We want to make this amazing life choice of buying real estate, and we got to go to the doggone bank to do more than put money in or take money out. Okay, so it can be scary. And so one of the things I love is taking the fear out of talking to the bank, because that's who I am, right? Like, I'm the bank. I'm like you. And so the pre-approval process is really pretty simple. And if you're working with the right lender, you should be comfortable. You should be comfortable to ask any questions that you have. You should be comfortable to ask what is the process. And you should be comfortable to know what happens next. So the pre-approval is actually a formal application that you do with the lender. Many lenders are going to give you a link or give you an online application these days. And you'll go in, you'll submit information. The basic things that we want to know about are, who you are, where you live, where you've lived for the last couple of years, where do you work, where have you worked for the last couple of years, what your income is, and then how you've established yourself financially. So the credit report is really just a reflection of, what we've done historically over time. Snapshot of the last 2 years is generally what we look at most to see how you've managed your finances. And I think that can be one of the scary parts, right? So we're in COVID. That's the reality. A lot of things have shifted in our worlds and in our lives, even financially, within the last 12 to 18 months. So the credit report right now might look a little bit different than it did 24 months ago, pre-COVID. Don't be nervous about that, because the beauty is that you get to start where you are. But I always advise buyers, don't go and try to fix your credit yourself, because you might go address some things that are going to do the opposite of what you really want to do to get you further along in the pre-approval process. So the first thing that we do is we take a look at credit. When we're looking at credit, we're basically looking at, what is the credit scores? We're going to pull Equifax, Experian, and TransUnion, all 3 scores. You'll know what those scores are, right? We'll tell you what they are. We're looking at the score that numerically falls in the middle. That's the one that we actually qualify you by. So don't call me and say, hey, the average of my 3 credit scores was. We don't do averages. We take a look, and then whichever one, if it's Experian that falls in the middle, that's the one we go with. If it's TransUnion, so we look at the 3, and then we basically are making a determination off of that. The cool part about me as a lender, okay, is that I have probably had every credit hiccup that most folks would possibly experience, other than a bankruptcy or a foreclosure. But I've worked with enough people that have even experienced those things where it's just not a big deal, guys. We get through life. It's a journey. It's a roller coaster, right? And so when life things happen, all we need to know is what the rules are. Once we know what the rules are, we know how to play the game, right? It's kind of like Monopoly. When you first started playing Monopoly, we didn't win all the time, but once we got better, we knew exactly what the strategy was, we could play. So the pre-approval letter, number 1, allows us to look at your credit. Number 2, it then allows us to see how much you can afford. Right. So we're looking at your income. We're taking your documents, and we're looking at your income based off of the income and then the debt that you have. Generally speaking, good rule of thumb, whatever your W-2 was last year, multiply that number times 3. That's roundabout what your housing should be. Okay. So if you made $50,000 last year, roundabout $150,000 is probably where you want to keep your mortgage. That's just a general, very general rule of thumb. If you made $80,000 last year, round about 240,000. So take that number, multiply it times 3, and that's going to give us an estimate, right? Now, when I look at the full debt, it might be a little bit lower, might be a little bit higher, but roughly you don't want your housing payment to be more than a third of your income. So in the pre-approval, once we've completed the application, then we also take a look at what the interest rates are based on what your particular financial profile is, right? So there is no one standard interest rate that's out there. We take a full look at the profile, and then at that point, we can kind of look at what the interest rate is going to be. Right now, interest rates are anywhere between 3.375 and 4%. It depends on the profile. It depends on the type of property that you're purchasing. It depends on the down payment that you're making. But the pre-approval letter is extremely important because that gives you leverage when you're out there shopping with Angel or with Langston. They can actually say that, hey, you know what? I've actually been to the bank and I have a letter that commits that I can get the money. Okay. And so when we're going through that pre-approval process, there are going to be some documents that we're going to ask you for as the bank. We want to see 2 years of W-2s. We want to see 1 month of bank statements. We want to see 2 months of recent pay stubs. Recent bank statements. We typically want to see your retirement account and a photo ID. Now, people ask me all the time, what do you want with my bank statement? Why are you looking all up in my stuff? And I say, hey, here's the reality. If your best friend came to you and asked you to borrow $200,000, okay? This your best friend. Y'all are lifers. Y'all been doing life together for 20, 30 years. Would you not at least want to see how they have managed their money for the last 30 days? Right? So we don't really care if you went to the boat, or if you went on a shopping spree, or you went to Vegas. We just need to see that you kept your balances. They didn't go beyond what you had in there. And we want to see that your pay stubs have been deposited, right? Any deposits that are outside of your payroll, we're going to take a look at that, and we're going to need to get some more information because we don't want you just getting deposits from anywhere. Okay, so those are kind of the list of items that we're going to be looking at and looking for from a financial perspective. There's some additional items that could come up, all right, depending upon what you're utilizing to qualify. So you don't have to be working per se to actually purchase a home. If you have Social Security, if you are retired, we will ask for various award letters to document what that monthly income is. If you have child support and you're using the child support income to qualify for a mortgage, then we're going to ask for documentation from the courts to show what the age of the child is and how long you're going to get this support. If you've actually filed a bankruptcy or had a bankruptcy, we want to see the discharge papers and we want to see the list of creditors because we really want to make sure that the credit report is reflecting accurately. And then if you are qualifying for a first-time home buyer program or a down payment assistance grant, we're going to ask you, in addition to the other documents, we're going to ask you for 3 years of tax returns, and we're going to ask you for 3 years of W-2s. And the 3-year is really important in Illinois because in Illinois, let's say that you bought a home back in 2010, you decided to sell it in 2012, and you're coming back in 2021 to purchase a home. You are now a first-time home buyer again. So what we're looking at with those tax returns is that in the last 3 years that you actually have not had mortgage interest or real estate taxes on the returns, and that's how we know if you're actually a first-time home buyer. So those are the documents that are going to be required. We'll talk a little bit more about down payment assistance money a little later in the program, but I hope that kind of gives you an overview of, what the bank is looking for. It's not rocket science, but again, I want you to be mindful. If your friend came to you and asked you about $200,000, it's some things that you want to see to make sure that you can get your money back. So this is not your friend. This is the bank.
All right. Thank you, Cecelia. Can you touch on some of the loan offerings real quick for us? Because we're approved. We got our pre-approval letter. We've submitted everything.
Yes.
The difference between those loan offerings.
Absolutely. So, so the basic three that you're going to see, or the traditional three that I'll say that you're going to see, are going to be FHA, conventional, or VA, right? So an FHA loan is generally going to be for someone who's had some credit blemishes in the last couple of years. FHA, as always, I like to say, that's my friend, because they understand that life happens every once in a while, and they'll let me be a little bit more flexible in terms of what has happened if I can explain that correctly, right? And if it makes sense to the underwriter. So with that loan, typically you're going to have a 3.5% down payment. Generally, the score is going to need to be between a 620 and a 640 credit score. And what I love about FHA is that, when it comes to some things like bankruptcies or even, foreclosures or short sales, the waiting time period is not quite as long as if you had needed to go conventional loan. One of the drawbacks, or two drawbacks, I would say, with FHA is that you do have mortgage insurance that is the life of the loan. So you want to transition out of that loan at some point with a refinance, because it is a more expensive loan, but it is always a great option to get into your first home. The other thing with FHA is that with student loans, if you're a person that has a lot of student loans, or your student loans are in forbearance or not being repaid, then we're going to have to use 1% of the full balance of whatever that student loan amount is. And so sometimes that can be a deterrent for somebody that's looking to purchase, because it will decrease their debt to income rate, or increase the debt to income ratio and decrease their purchasing power. Conventional, on the other hand, is going to require a 3 to 5% down payment. And that's going to depend on a few things. 3% down, the mortgage insurance is going to be higher than on a 5%, because mortgage insurance on conventional loans is tiered based on credit score. So the stronger your credit score, the lower that mortgage insurance premium is going to be. On conventional, the mortgage insurance generally goes away once you get at about 80% of your loan to value. So conventional is really a great loan product for anyone who has really a strong credit history, especially within the last couple of years. And then the last one is VA. So VA, for all of my veterans out there, thank you so much for your service. We appreciate you and everything that you do on a day-to-day to allow us to continue to do what we do. Our veterans, we do allow them 100% financing. It is a 0% down payment. There is no MI, and depending on the type of service that the person has done, they may have a funding fee or they may not. What I also love about my vets is when we get down into the paperwork with vets, because there are some additional documents that we have to get from them. I have been really successful at assisting our veterans who have a service-related disability with no real estate tax bills. Did you hear me? If you are a veteran and you have a service-related disability, and your certificate of eligibility comes back at a certain percentage point in Illinois, your real estate taxes are greatly impacted by that. So I love our veterans. I love all of our first-time home buyers, but veterans, we have a few extra benefits and perks there. So those are your basic three type of loan offerings. So even when you're getting a down payment assistance program, you're going to fall into one of those three categories, generally speaking.
All right. Thank you, Cecelia. All right. Choosing a lender. Now, we've provided you with Cecelia, who has educated you thoroughly. All right. So, of course, Langston and I will probably lean and encourage you. No. So when you work with
Definitely.
your agent, you can ask us for a referral list. We'll provide you with a list of options of people that we've worked with, we've had great interactions with, we've had great transactions with, and that will educate you on the process and help support you. They'll partner with you to be able to help us get you into that home. Okay. So that's why you should hire an agent as soon as you decide to purchase a home. All right. So when you're choosing a lender, of course, you want to interview all the people on our referral list. But honestly, if you attend any of our homebuyer webinars, you'll know those people on our referral list, to be honest, because those are the people that we decide to use to help educate the community, right? And you'll choose the one that you feel most comfortable with. we understand that not everybody clicks. You know, you got to have, you know, even being on the webinar, you may say, oh, you know, that Angel girl's okay, but Langston, that's my guy. Or you can say, hey, Langston's cool, but you know what, Angel, I'll go with her. It doesn't matter.
It just be like that sometimes.
Yes. So we understand that and we respect that. So the same with choosing a lender, the same with choosing an attorney. When we get to that point, you know, it's one of those things that it needs to be right fit. You need to feel supported by those people. Like I said, they'll prepare, like Cecelia said, she'll prepare the loan application and you'll get approved and then determine what to pay and select a loan option. All right. So that is part of choosing a lender. Moving on, let's talk about creating a budget. Now, Langston and I did a budget workshop and we went over a bunch of different tips and stuff. But Langston, you want to talk about creating a budget?
So actually, I do this with my wife every month. So creating a budget, you got to figure out what you need and what you can live without, because your budget, especially as you move towards such a big purchase, should be focused. You know, you shouldn't be blowing half a paycheck shopping unless that's what's in your financial plan. But otherwise, most people tend to hunker down. And I recommend it. It helps you cut out some of the fluff. And sometimes people end up saving a lot faster than they thought they would. If you can really narrow down what you need, what you can live without, what you can't live without, it gets you to the finish line all the more faster. And then you also have a tendency to learn what you don't necessarily need moving forward.
Exactly. You know, because once you get into that home, you know, you have different expenses. So even though you may be, once you get that pre-approval and everything, it's good even then to look at, okay, based on housing prices and what I'm seeing I'm interested in, you know, where do I want to stick with within my budget? Just because you get pre-approved for 400,000, 450,000, if you go there, it doesn't mean you need to use all of it and set yourself up in a situation where you won't be able to maintain that home either. So you start during the home buying process, creating a budget to help you get into the home. And it's good to just continue that and think about that as you're looking at properties. And there's different apps that you can use, but of course, if you work with Cecelia, she has an app that can help you break that down. So while you're looking, you can say, you know what, based on if I offer this amount, if I offer 200,000 and the taxes are, you know, 5,000 and the HOA is like 250, you know, it gives you an idea of what your payment could be. So that can help you identify as well. So you make sure you're making smart money decisions from the point of deciding to buy a home, figuring out a budget, cutting expenses to getting into the home. All right. And maintaining.
And one thing I love about our app, Angel, is that it's really an accountability tool, right? So people, when you work with me, I become your accountability partner. So we go through a full pre-approval conversation and we talk through what do you want to be, what is your monthly payment comfortability versus what your max approval amount is, right? Because I could tell you that you can get approved for 500,000, but you may not want the monthly payment associated with that. So after we've had a pre-approval conversation, that's when the client actually gets the mobile app, because if they go over the amount that we've talked about, that they told me that they were comfortable with, then guess what? The approval will not let them send an approval. It'll actually say at the bottom, call your banker. Right. So it's a way for them to know, well, what's wrong? You know, they're kind of looking at the app like, well, what's wrong? Okay, well, maybe I need to call Cecelia. And when they call me, I'm like, well, you're going over what we said was the max. So let's talk through, why are we going over that number? Right. So, you know, the partnership all the way around the board is really to help be accountable and to help you be accountable to your dream.
All right. Thank you. All right. So, Cecelia, can you speak to the different factors that affect your mortgage?
Absolutely. So as I said earlier, the first thing that we're going to take a look at is credit, because there might be some things that we need to do to spruce it up a little bit, as I like to say. So we're going to look at your credit history. We're going to look at your monthly pre-tax income. So whatever your gross income is, we don't look at what you bring home. We look at what your gross income is. We do look at your monthly expenses to help determine what your debt to income ratio is, right? What do you have coming in versus what's going out? And then we also look at the amount of cash that you have available for down payment. So we can help you to figure out, what programs are available, but if there are gaps that we need to help fill before you get out there and begin shopping.
Right. Thank you, Cecelia. All right. So can you talk about what composes a monthly mortgage payment?
Yes. So your principal, your interest, your real estate taxes, and your homeowner's insurance. So I always share with people that unless you are coming and you're putting 20% down payment, then your taxes and your insurance are automatically going to be included in your mortgage as a safeguard, because we don't want to just help you to get the home. We want you to stay in the home. And so when we are looking at even the pre-approval, one of the things that I'm going to ask you is, what areas are you considering, so that we can make sure that we allot the right amount of taxes based off of that particular area. So the principal is basically what you're paying. It's the portion of the loan that you're paying back. The interest, of course, is just that. It's the interest that you're paying back to the lender, right? The real estate taxes are just that, and then your insurance. The other piece that we should probably talk about here is mortgage insurance. So again, if you're not putting 20% down, then you will have a monthly mortgage insurance, generally speaking, that is added to your monthly payment. So those are the things that's the full comprehensive payment that you're going to be making.
Okay. Thank you again, Cecelia.
You're welcome.
And down payments. All right. Can you talk to us about down payment programs a little more?
Yeah, so I am such a proponent of using other people's money in all facets. Okay, so I'm generally speaking not gonna ever tell you to put 20% down. I'm just not, right. I think that I could probably, and I'm not, like the math genius or anything like that, but I think we could probably figure out a way to make our money, have our money to make more than 4%. And so if the interest rate, let's say at the high right now, is at 4%, then I'm gonna keep my other 10%, 15% that I do have access to, and I'm gonna make me more than 4%. That's my thought, right? But depending on the loan that you're getting, the down payment can vary from anywhere from 0% to 20%. 3 to 5% is generally going to be that norm. So the first thing that I'm going to look at is your assets, like what bank statements you've shown me and provided. So any type of savings account, checking account, we're going to take a look at that. I also don't believe that we should deplete all of our assets. So when you go to the closing table, you should have more than just $500 left in your bank, because you're going to want to go buy something, some new towels, some new sheets, right? Like you're a new homeowner, you're going to want to go and buy something. I'm not saying go crazy, but I don't want you to exhaust everything that you've actually saved up. So that's when we begin to look at where other money comes from, right? So right now, the state of Illinois has several different products. Tonight, I will talk about two of the more popular ones, which is Opening Doors. And then they also have another program called Smart Buy. Smart Buy is IDA will pay you up to $5,000 in closing cost assistance and down payment and closing cost assistance, and they will pay you up to 15% of your student loans. The catch with that particular program is that it's based off of the purchase price of the loan. So if it's $100,000, the student loan max has to be $15,000. With that being said, you can only have up to $15,000 in student loans. If you have more than that, you can't use that particular program. So it's a little bit tricky. So you got to call me. Don't try to figure out the math on your own, right? I will do all of that heavy lifting for you. And I promise you, if there's a program available, I will let you know if you qualify for it. The other program that I love is the Opening Doors. That one is $6,000. It does go towards down payment and closing costs as well. That's a flat $6,000. I love it because unlike some of the programs that we've had in the last few years, there is no monthly payment that's associated. It's a true grant. So you got to know the difference between the programs that are out there, right? So sometimes these little programs will say, well, you're going to pay us $88.88 a month for 5 years. Well, you just paid them back their money, right? It was just a 0% interest loan. It wasn't really down payment, in my opinion. Okay, so just be careful. Make sure that you read between the lines. That's not to say that it's a bad program. I just want you to be informed about the type of program that you're getting into because some people might actually need that program. Those are the two major down payment assistance programs. There are a ton out there, though. The city of Chicago has programs for police officers, firefighters, county workers. And so, what I do when we look at the pre approval, I pair you with the best program that's available given what your financial situation is. If there are programs that maybe your job offers, share those with me. I send them through our attorneys and our regulators. If it's something that we can use, then we'll add that as well. The other source that, sometimes folks will get money for their down payment will be a gift from a family member. I don't know about y'all, but unfortunately, my mama didn't have no money to give me when I had purchased my house. So that wasn't on my list. But there are people that do have that option. So if you're doing a gift, again, you want to talk to your lender because it's very specific requirements that we have to source the gift money. And it's very specific people that are considered family depending on the program. For example, if you're doing an FHA loan, a family member is your mother, your father, your sister, or your brother. That's it. We don't want any cousins, no god friends, mother, father, sister, brother on FHA, right? So you got to know what the rules of the program are. If you send me a gift letter and it says that that's your cousin, we're going to have a problem, right? The other area that some folks will get money for down payment is sometimes their retirement accounts, their 401ks. They can borrow against that money. Depending upon, the financial profile of the client, we're going to take a look at options kind of linear, right? First is savings. Then we're going to look at down payment assistance. Then we'll look at gifts from family members. And retirement accounts are kind of that last option, in my opinion, because they're depending on the 401k, there can be different rules for that as well. So those are, some of the more basic and general places that we get our down payment money from. But do not let down payment be a factor in you not taking the first step, because where there's a will, there is a way.
That is the truth.
Great.
All right. So maintaining your pre-approval. All right. You've gotten approved. And there are some things you need to not do. To maintain that pre-approval. All right. So no big purchases, no credit or debt added, no job changes. Now there's ways, and I can let Cecelia speak to that, like in certain instances, and protect your down payment. All right. But these are the big things. You don't want anything to happen to where, it's not the time to go shopping. All right. Yes, we're looking for a new home. We may even be under contract on a home. That is not the time to go shopping. Okay. You just got to wait it out. All right. So you want to touch on how to maintain pre-approval?
Yes, and when I say shopping, I mean don't shop at all. Don't go furniture shopping. Don't go bag shopping. Don't go vacation shopping. Just don't go shopping. Like, this is a sacrifice, right? It's one of the biggest purchases that we are making in our lifetime, most of us. So we don't want to do. I'm just saying, if you don't have to, this is a true story. Like, this is a true story, Langston. Okay, you guys are gonna think I'm joking. So when I was buying my house, and I'm a really transparent person, so I share. So when I was buying my house, I was going through a divorce. Okay. And so it was myself and my younger son. And I was scared. I was nervous. That's just the reality. So I was like, we're not even going to Target, right? So my son gets in the car because that would be like our routine. I would pick him up from school, and then we go to Target or we go to McDonald's. Like, one of the two was going to happen any given day. And it must have been about a couple weeks, right? And he looks at me one day, he gets in the car, he's like, Ma, we don't go to Target anymore. I was like, we are buying a house, so we are not going to Target. Now, you have to know yourself, right? I had a Target weakness then, right? For me, Target was Target. It was one of the best places that I could attend during the week. It was like a stress reliever. So it didn't matter what I got, as long as I walked out of there with something great, I was good. So for me, I just cut it all out, right? Because I did not want to jeopardize being able to complete. So yeah, so I say no purchases, right? Or go back to that, what you shared before about the budget, right? So if I have in my budget that I've got $100 in play money a month or whatever your number is, and I take that money out of the bank and I put it in an envelope and I put the envelope somewhere, right? Purse, glove compartment, I don't care where it is, but that's my play money. Then maybe I'll go to Target with that play money. But that's it. Right. So it's got to be kind of like one of those things again where we hold ourselves accountable. For sure, no new credit or debt added, because we are going to repull, soft pull, not a hard inquiry, but within 24 hours of closing, we're going to take a look at your credit to see if it changed. We're going to see if anything new has been added. And if it has, we have to go back to underwriting. That means you're not closing on time. With job changes, I always ask you to inform me, right? Because we need to know, is your income going to increase, decrease? Is it a lateral move? Is there a shift? Is there going to be a gap between the time that you stop this job and start the next job? So we don't want to really do a job change while we're in the middle of purchasing. But again, life happens. We're in a very unfamiliar space right now. So we've had to kind of take some of those things into consideration. So if you are changing jobs, call your lender, let them know. You at least need an offer letter, right? Because we need to see something in writing. And if you are starting a new job before closing, we may have to wait until you have your first pay stub. So again, it could extend your closing out. So it's really, that part is really important. And protecting your down payment. Absolutely. Look, get an account online. Send that money over there so that you can't get it for 3 days, and it's not going to be back transferred over anytime. You can't just transfer it like real quick, right? So I say get a non-convenient account somewhere online where you have to actually think about your what you're doing. Like, our financial habits are something that we build over time. So we have to create ways that we find discipline to make sure that we're all in when we are taking this step. So those are some really great points, Angel.
All right, thank you. All right, next step. Step 3, find your home. All right, so finding your home. In a buyer consultation, Langston and I will talk to you about, what are you looking for? Your needs versus your wants within your budget based on your pre-approval, all right? We'll talk about the market. What's going on with the market. Are there a lot of houses on the market? Right now, we know it's more of a seller's market. It is low inventory, but everybody's out there buying. So there are bidding wars. So we'll talk to you about that. When it's a buyer's market, you have options and you can negotiate more. All right. And then we'll zero in based on needs versus wants in the market and help you refine your search. All right. All right. So who has been looking for houses already? I'm going to do a quick poll. All right, I'm launching now. So tell me if you've been looking at houses already. Yes, 100%. Oh, no, we're split. Okay, yes. All right, so that's the fun stuff, honestly. That is the stuff that we enjoy, especially if you watch HGTV, you get to look in and you get to seeing how their process is. But it can be a bit different for you out here in the real market in the day-to-day. All right. So Langston, you want to talk about the difference between what buyers look for and then the difference between what we look for as their agents?
Yeah. So typically buyers will look for an immediate gratification, just to some level. They want what works for them now, what works for where they want to be, how much space they want to have, and just what's in the area, what's in the house, the things that work. We have a tendency to look at all of that, but also like, what's the potential for the things that you've already mentioned that you want? What's the potential for like what's the time frame you can realistically exist in this house? You know, if you have a 12-year-old and a 10-year-old and a 14-year-old and it's two boys and a girl and you're getting a 3-bedroom house, like I know that that's probably not going to work for you long term, not as those children get older and start to need their own space. So, you know, I'll probably have a tendency to look for something that's a little more than what you're asking, just to give you something, give you an idea of what you can realistically afford within your price range while also getting what you need and maybe something you didn't know you needed.
Right. Thank you, Langston.
You're welcome.
All right. All right. So there are pros and cons, of course, you know, to a condo or a townhome. You know, there's lower cost per square foot than like a great big old house. There's no yard work or home maintenance. There's usually all these different amenities. And some people like more of some of those communities. But some of the cons can be shared ownership of space inside the building. It's managed by a board of directors, and there's usually rules with pets and vehicles and noise. There may not be that much parking. You know, you may have 2 spots. You know, if you're someone who has a lot of family that comes over, you know, you need to take those things into consideration. Now, another consideration could be for you if you're not doing like a single family detached home, not a condo or townhome, is a new construction. All right. It can be an option, but there's pros and cons to that as well. You know, everyone loves a new construction. It's new, it has warranties. All right. You know, you can pick your lot and some of the features. You know, you could pick between different colored granite countertops and different colored cabinets. You get to lock in a price. There can be some good deals. There can be some incentives too if you use their lender, but you got to remember it's their lender. So some cons can be features add-on prices. All right, y'all. Okay, when it comes down to it, they normally come with a partial basement. If you love a full basement, there's going to be extra money, several $1,000s. If you're someone who likes a lot of windows, sometimes an extra window in certain rooms costs a little more money. All right. You got the future of the neighborhood to think about. You know, how long is it going to take for them to build and finish everything? And through that time frame, your taxes can adjust and change. They could start out fairly low, but then you can see them increase once it's all said and done and everything's up. And there's no firm closing date. That's a big thing right now. You know, we're waiting for building permits. Then there's the construction meeting. And then, you know, we love the design meeting and the picking the features and everything, but there's all those other things that still need to happen. And there's the outside world that can impact that, like it has impacted recently, to where, you know, right now they can't build new construction homes as fast as they're selling them, honestly. And so even today at this point, last time checks, new construction community delivery date for some of the communities I work with is February 2022. You know, can you wait that long? So is it worth going into that bidding war in that resale house that you liked, and, you know, maybe it didn't have the countertops you wanted, but you could deal with them until you can make some changes and update? Or do you want to go for that new construction, design it, and, you know, you have to figure out what your situation will be down the road, you know, until you have that delivery date. So those are some options to think about, but we can help support you through that. All you have to do is talk to us and ask. All right, so making an offer and negotiating. So once you pick a home, we will help you with that. All right, you pick a home, we've taken you out, you've seen what you want. It's time to make that offer. We're gonna do the contract. All right, we're gonna talk price, we're gonna talk terms. You know, are they going to give you any closing credits? What's the contingencies, home inspection, termite inspection? Just depends on all those different things. Do you need to sell your current property? If you don't have a property to sell, then it's just you trying to figure out when you can get into the home and picking a closing date. But also, this is a good time to start to bring in your attorney. Now, as agents, Langston and I will write the contract, but you want to make sure everything is in order. And so this is a good time to introduce your attorney. So Grace, can you talk about making the initial offer and kind of like what you do when you review the contract?
All right. So hello. All right. Now your attorney is here. And definitely I will echo what everybody has been saying. Our goal is really to make this process smooth for you. Okay. We already know it's a very, nerve-wracking process, but we aim to make sure it's smooth. And so when I come in is when you now have this offer, right? I mean, sometimes I actually do have clients who I speak with before the offer is signed, the contract is signed by the seller. But we say that legally you have an offer or you have a contract when you have signed, you've signed the contract, you send it to the seller, and your realtor will help you with this process. We send it to the seller, there might be some back and forth negotiation. It comes back, the seller signs it. At the point that the seller signs it, we say that you have a legally valid contract. Now, what your attorney does, and most of the contracts, I have to say, have this attorney review period already written into them. And that gives you usually a 5 business day window for your attorney to review this, for you to do a more extensive inspection of the property. And, with this, you'll get I think one of you will talk about that, get an inspector. Langston and Angel have all the referrals, so they'll hook you up with whoever you need to work with. You'll get an inspector, they'll come in, they'll check out this house. And what I do as your attorney also, I'm looking at the contract to see, okay, what terms in there do we need to put in to protect your interest? And then also when we have the inspection report, all of that are incorporated together to essentially request for more changes so that when you sign the contract, when the seller has signed the contract, there's still room to make changes, or there's also still room to walk away from the deal if you're like, oh my God, this is not, the house looked pretty, but I discovered things that this is a deal breaker for me. So.
All right. Thank you, Grace.
Yeah.
All right. So it takes us into step 5, inspection and repairs. All right. So we'll say, don't sweat the small stuff. It's the big stuff that matters. It's cracks, crumbling foundation, water stains in the ceilings, floors, or walls. Those are signs that there's some leakage, some plumbing problems. If there's plumbing or electrical problems that come up, if there's mold or termite issues, those types of things are things that, we want to consider and look at. And that's where Grace comes in, and you tell her, what are those things that, okay, I need either some credit or we need to do something. So Grace, can you talk about that a little more?
Definitely. Definitely. So with the inspection, when we get to the inspection phase, and actually, I would say, just let's caveat with the fact that the whole real estate process is really still a negotiation between the buyer and the seller. So just, I'm not going to date myself, but I've been doing this for a while. I would say I've had clients who are like, okay, I really love this house. I don't care if it's falling apart. I want this house. I'm going to take this. I'm going to, fix this. But just to backtrack, the inspection report. So the inspector, when you get the inspector, and this has to be done within that 5-day inspection period. However, if you're not able to do that, or maybe, the inspector is like, oh, I'm not available, I'm only available next week Tuesday, and this puts you outside of your 5-day window, you let me know. And what we do is we will request an extension of that contingency to give us more time to allow you to do this inspection. So once you do the inspection, the inspector, and I always advise my clients to go with the inspector when this inspection is being done, because what happens is sometimes you see on paper, like the electrical lights, it's not blah, blah, blah. And it's just the light bulb that's missing in the room. So, you kind of want to see it in person to see what this issue is it's about. And also another thing I recommend to clients is always to ask the inspector, hey, how much will this cost? Or what do you think this is? So that way you have an idea of what you're looking at, what the issue is. And so after all of the inspection is done, what the inspector will do is they'll put together a report, and the report will consist of all the issues that were identified, all the places that were inspected in the property, and they would even put pictures, so that way we have reference of the exact location in the property where all of these issues are. This will be sent to you, and once it's sent to you, I tell clients, because sometimes I have clients saying, oh, I got this here, send it to the seller, fix all of this. No, that's not the case, especially if it's not a new construction. Now, if it's a new construction, we need everything to be in top shape. You know, we want to make sure like everything, but generally speaking, we're not buying a newly built house. So there's always going to be something wrong. And that's why we emphasize to don't sweat the small stuff, because the inspection report is really, I tell my clients, it's really my buyer clients, it's really your checklist to know, okay, these are all the things that are going on in this property. These are things that I would like to fix, or these are the things I could potentially take on. Is this okay for me? You know, is this okay with me? But then also, you do also have a right to ask the seller to make some repairs. And that's where I tell the buyers to go look at the inspection report and pick out the big items, you know, pick out the things that are important, because technically under law, when you ask for the seller to make this repair, you're actually making a counter offer. And if you, and I stress this, generally a lot of sellers don't do it, but you just want to make sure, because if this is a property that you really like and the seller already has some people offering, and you send them like 2-page list of repairs, they can legally walk away from the contract. So you want to be mindful of your inspection repair request, and we send that over. Once we have that list of, okay, these are the things we want to request for the seller to repair, it's incorporated in the attorney review letter. We'll send it over to the seller. The seller now takes a look, and they can say, okay, you know, some will agree to fix it. Some will say, no, I'll fix this, or I won't fix that, or I'll do this or that. Some would say, you know what, not touching anything, take it or leave it. And some other ones, some sellers might give you a credit for it and say, okay, you know what, instead of making this repairs that you're requesting, I'll just give you an additional, you know, 1,000 or 2 credit to address it after we close. So that's really a big, that's just a general overview of the whole inspection process, and also just kind of hammering in that don't sweat the small stuff point that we're trying to make.
Thank you, Grace. All right, so pre-close, keep yourself mortgage worthy and budget for additional expenses. All right, so Grace, can you kind of talk about some aspects of this pre-close, these costs in here?
Yes, definitely. So we talked about, so this is just the closing expenses. The closing cost is essentially additional costs you have to bear in mind if you are if you're buying a property, or I know this is a home buyer seminar, but even when, you know, the time comes and you're selling to buy your dream home, there are also some additional expenses, additional costs that you have to incur. And these are generally what we call the closing costs. And the closing costs, basically, it's made up of, if you're getting lender financing from Cecelia, there will be some loan charges. There will be some charges, you know, to pull your credit report, to do the appraisal, some loan origination fees, and, you know, things like that. There will also be your, definitely, well, you have to put the earnest money. The earnest money, I won't really call that a closing cost, because you get that back. So the earnest money you put down at the initial contract is just to show the seller that you're serious about the deal. But at the closing, that money will come back to you. So it's not an additional expense, but it's also something that has to be paid upfront. Your inspection, the cost of the inspection generally is, I would say, actually, realistically, not 100. It's usually like $200-300 to $600, depending on how extensive the inspection is. And with the extensive part, I usually have, especially with investor clients who are buying multiple properties, or if you are buying a property that requires a lot of repairs, you want someone who knows actually what needs to be done and will give you a good idea of what all you're walking into, just so you have a good idea. And then also another closing cost could be the survey. The survey fee in Illinois, the survey is generally paid for by the seller, but sometimes this can also be negotiated as part of the contract. So the survey is generally a closing cost on the side of the seller, but I've seen it one time, you know, once or twice on the buyer side, because the parties use this to leverage the cost of the purchase price of the property. And then you have your escrow, your tax escrow, and your insurance escrow. So that escrow account that Cecelia talked about earlier, about your taxes and your insurance being paid from your mortgage. Also at closing, one of the things that your lenders want, they want a few months payments of that escrow amount, you know, the insurance of the taxes, usually about 3 months or 5 months for your taxes or insurance. And that goes into that escrow account just to cushion it so you're not starting from zero once you start making your payments. That's something also that adds to the additional closing costs. Another closing cost definitely is your homeowner's insurance. So your lender will require you to have homeowner's insurance on the property before by closing. And this is also another line item on your closing statement that you would have to pay at closing. Let me see, what else did I not mention? Your miscellaneous fees, like your recording charges. You have to pay the title company to record the deed. And the deed is what will transfer the property from the seller's name to your name. We also have recordation of the mortgage that's showing that the bank is giving you money to purchase this property. We can't stress the fact that, like we said earlier, you have to have some extra money to make some repairs, buy some things, buy new shower curtains, whatever you need once you move into the home. So that's outside of closing. And definitely you have to pay your lawyer. So your attorney's fees as one of your closing costs. Yes. Those are additional. So these all make up closing costs, additional charges that the buyers need to expect when they're closing. And this is also, when you work with Cecelia, this will help you with that budget. So that way you're not looking, okay, the house is $250, I just need to figure out $250. No, there are additional things like this and title charges or, other charges that add up and make up your closing costs. And this is usually about 3%. It usually comes up to about 3% of the property price. So that's, I guess, in a nutshell, or not in a nutshell, is really what closing costs is all about.
All right, thank you. And so did you want to add to that?
Grace just did a fantastic job. That was phenomenal. Let me tell you. The only thing that I would say is when we have our pre-approval conversation, the first part does talk through the monthly payment and what they can afford, but the second part is a cash to close, and we have kind of an estimated calculator that we go through so that when they get to closing, or the day before closing, it is not an unfamiliar conversation. Like, we've actually talked through some of these numbers, and that shifts, right, depending on the property that they identify. But Grace did a nails in the wood kind of a presentation. Great job.
Yes, she did. Thank you both, ladies. All right, and what will happen is Langston and I will schedule a final walkthrough of the home the day before you close. All right, so we want to make
Or
sure
the morning
or
of.
it could be same day, morning of. Yes, thank you, Langston. I was about to say. Because we want to make sure the house is in the condition, if there was supposed to be items repaired or fixed or something, that those items were done, or at least it's in the same condition that you saw it in when you toured the home, as well as it's clean, everything's taken out. Langston, you want to touch more on that?
So the walkthrough is important as well, because sometimes there can be conditions of the walkthrough, conditions of the contract that weren't met that we find in the walkthrough, and that can change closing altogether. That can put a whole halt to the process if they chose not to do something, or they just figured, oh, you're not going to see it. Like, no, we about to hand you how much money? You think we wasn't going to check?
Yeah.
So there's a lot going on in what are good practices and seemingly innocuous, but are necessary to protect your investment and to make sure you're not starting in the negative because, we missed something.
Yes, definitely. Thanks.
Oh, go ahead. Can I add to that?
Yes, Grace.
I was going to add to that. The walkthrough definitely is. It's very important. I tell my clients, true story. We had a closing happening and the property got burnt down the night before. So that has happened. I've had a situation where the property was vandalized the night before, and then another one where there was water damage. So there was some pipe leakage or whatever the day before closing. So walkthrough is very key. And even on the day of, I tell my clients, because we always try to schedule the closing right next, close to the property, drive by the property. If it's a single family, make sure it's still there, because these people, you know, you could go there, sign all the stuff, nobody knows what's happened. And then now we get into the argument of, okay, when did the house burn down? When did this happen? Who's, you know, so just make sure you look at that. And I always tell the clients, when you go for the walkthrough, if there, and Langston is right, there are things sometimes, so back in the attorney review period with that inspection report, we have, if we had agreement that seller was supposed to repair something, usually the agreement is that the repair would happen before closing. So the walkthrough is really your chance and opportunity to go back and make sure that these things are done. Not only that, even if there was no repair, the walkthrough is also your chance to go in there and make sure they didn't damage the door or things while they were moving their stuff out. Maybe at the time you viewed the place, there was still furniture in there. So that's also happened. And then I would also say, what I tell clients, when you go to the walkthrough, make sure you look around again, because that is your final chance and you're taking that property the way it is. If there are any issues, take pictures, take videos if that's necessary to reflect what the issue is. And I have no problem holding that closing until that issue is fixed, or we get some kind of credit to fix that, or we have some money in escrow, you know, assuring that that will be fixed. Because sometimes we might not be able to extend the closing because maybe client already has to move, or your rate lock issue. And rate lock, Cecelia would talk about that. That's how long your interest rate is good for. But we will still close, but make sure that the seller puts some money down to make sure that those things are fixed. So yeah, walkthrough, really, really important.
Yes, thank you, team. All right, step 6, close and be a homeowner. All right. Yes, this is the fun stuff. We made it, we survived. All right, we're headed to close. Grace, tell us what we need to do.
Okay, so closing is the bum, 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 bum. That's the time where Cecilia's like, hey, buyer, you got the money, you can schedule this. And I'm like, hey, okay, I call the other side, we're good. We all meet at the title company. Well, not all, with COVID, we have not all been meeting, but the buyer comes to the title company, and the title, generally the closings happen at the title company. And that's where the buyer will go. Cecelia will send over all the documents that we need to sign, and the buyer will sit there and sign all of these documents, usually like 60 pages to whatever long. And my job is to be there. First of all, one of the things I do is make sure before the closing, look at all the numbers, make sure all the credits you're supposed to get is there, your earnest money is being refunded to you, your tax prorations are correct, all the charges on the buyer side are correct, seller has done everything they're supposed to do number-wise, and you are looking good. For the closing, for the buyer, make sure you bring a copy of a valid ID. So yeah, ID must not be expired, because that just happened to me. And client had to drive back and go get a passport, but anyway. ID must be valid, and you bring certified. So the cash to close, and that's part of that closing cost and all the money you need to bring to the closing. You bring that in a cashier's check that's made out to the title company where we're closing. Now, if this is over $50,000, if you're bringing over $50,000, it has to be wired. And you'll communicate that with the title company. You'll get the wiring instructions, and that will be sent before the closing. So closing is pretty much the official day that the property is transferred from the seller to the buyer, and the buyer officially becomes the new owner. And at closing, we will sign documents, all the settlement statement, all the lender documents, the mortgage, you will see that, the notes, you will sign the notes, which is a contract between you and the bank, saying that, you will pay them this money, these are the terms of the loan. And my job is really to go through the key terms in that. We won't go through the whole thing because most things are general standard contract language, but the ones that are specifically pertaining to your loan, we'll go through all the details, make sure, okay, you were supposed to get a fixed rate for 30 years. It actually, in fact, states that your mortgage insurance was supposed to be this. It actually, in fact, states that. You will walk away knowing exactly how much your payment is, who you should be sending your payment to, what your liabilities are. And then also on that closing, another thing I make sure to do is look at the title. So the title commitment, which is a document, which is something that's a title commitment, I will describe it as it's a document that just shows you all the stuff that's on the property. if there's a lien on the property, if the seller owes someone on the property, if there's a violation, a judgment, a case going on the property, this will show up on the title. So my job is to look through that and make sure that by the time we close, seller has resolved all of the issues on the title, which includes, paying off every mortgage they have, paying whoever, if there's a lien, paying off whoever needs to be paid off, and taking care of everything that needs to be done, so that when you get the property as a buyer, you're getting clean title. There are no issues on the property. You're starting from scratch, and it's now yours. And you walk away into the sunset with your keys after we're done signing the documents, and jingle bells, we're done.
Awesome. Thank you, Grace.
You're welcome.
All right, so we've closed, we got our home. You need to protect your investment, all right? So you need to perform routine maintenance on your home systems, depending on the age and the stage. Keep an eye out for signs of leak, damage, wear and tear. Fixing small problems can really help you early on. If you let it linger, then that's when the issue can build and can actually be more expensive. And it's good to keep a file of all your receipts for your repairs. The average—
Buy a safe and an accordion folder.
Yes. The average person lives in a home for like 5 to 7 years, they say now. All right. So when you're ready to resell that home and you say, hey, you got all the files, the receipts, you got like warranty information, everything, then that is great for the new buyer or the other buyers considering your home. That's helpful information to them. They can see what you've done. It's appreciated. And that information being passed on is it's awesome. Honestly, it makes a difference, really. And then, of course, consider a home warranty with a resale home, and that can be negotiated too within the contract. All right. So, all right. Q&A. All right. So let's talk. I think we've provided a lot of information. I didn't see anything come through in the chat. What I will say is, as items come up, if you got anything, go ahead and go forward. All right. And I'll give it just a minute. Okay. And then if not, it's really not a minute. All right. So thank you everyone for coming and joining us tonight. This has been awesome. I appreciate all my speakers with me, my co-host Langston. We got the wonderful Cecelia with our money, and we got the wonderful Grace. All right, handling all our legal stuff. All right. So thank you again and take care.
Bye.
Bye.
Bye, guys. Have a good evening. Thanks a lot.